Look everyone, welcome back to the Price Action Labs YouTube channel. Here we're going to be going over a very requested topic, which is basically how I use the ATAS platform with price action. So just to give people an upside, right? This is the ATAS platform. I don't want to give people an introduction as to why I use it and why you are missing out if you're not using it, right? So we have regular candlesticks over here. We have a key level over here. This is just a 15-minute fair value gap. Now, the thing that traders get mixed up is that when price comes into these fair value gaps, how do you know whether this was a news event from Friday the 14th of March. How do you know that this wick over here is actually going to hold and we're going to have a reject of this particular area? So the way we do that is by simply using the ATAS platform, and we're going to dive into exactly how you can read numbers instead of relying on emotion. So the reason you rely on emotion is because you don't know what you're doing, and you don't know what you're doing because you're not in charge of who's in control, right? It's not that you're in charge. You need to understand who is in control between the buyers and the sellers. So here in the Price Action Labs mentorship, what we have is we look to kind of break things down logically, right? So we have a pre-market game plan, right? So what I was looking at pre-market was this over here. We have a 15-minute fair value gap. This is the lifeblood to trading, and we're going to be going over this. So when you have a pre-market game plan, it becomes very easy to catch these high risk reward trades like this. And as you can see, we profited just over here a few hundred dollars, right? So it's all pretty good stuff. So now when we go back to the regular candlestick chart, what we can understand is how I position myself to take this trade in the first place. So let's just remove everything and go all the way to the higher time frames. So let's go to the daily time frame to begin with, right? So here we have the daily time frame. So what's important to understand is that yes, we're in a very, I guess you could call large correction over here, but we've tapped into a very important area over here. So why is this area important, and why do we need to be understanding this as traders? Well, let's dive into this particular area, right? This was a daily fair value gap. So this was a daily fair value gap. We can see the wick over here and the wick over here. So price over here has given us a fair value gap. Our point of interest is just the candle below. So when we go to regular kind of price action over here, what we can see is price is very carefully, very exactly tapped into this area. So we've come into a daily fair value gap. So what does this mean from a price action perspective, right? This is basically a demand area, and it's a daily demand area. So a daily demand area simply means price is likely to head higher. So at an area of demand, we are just looking for higher prices. So now from here, when we go down to the 15-minute time frame, what we can see is Thursday has tapped into this particular price action over here. So Thursday has tapped into this daily demand area. This is important to understand. So now from here, let's understand things in terms of the power of three, because we've had a pretty bearish week. So bearish, we started here on Monday. So let's take this power of three tool and let's apply it on the weekly time frame. So why do we look at the weekly power of three? Well, it's really important to understand context. Where are we in terms of the market open? This is where the market opened on Monday. This is the weekly opening price. This is obviously the high of the week. We have expanded lower. So what's happened is we've tapped into a daily fair value gap, a daily demand area. We're below the weekly opening price. So this gives us indication to look for longs, right? When we're significantly below the daily opening price, or even in this case, the weekly opening price, this is what gives us indication to take longs, right? This is a massive confluence to taking longs. So if you want to form a daily bias, understand where you are on the weekly power of three, right? So the weekly candle is of course very bearish. Notice how if the weekly opening is over here, we are significantly below that weekly opening price, and it's a Friday, which means we are likely to see the TGIF, right? The ICT TGIF reversal is very simple. It's too good, it's Friday, or something like that. Too good, it's Friday. So it's essentially the reversal at the end of the week. And the way you master this is by understanding, number one, where the weekly opening price is, where that low of the week is likely to occur, and what day we are. These are the kind of two or three concepts I use, right? And it's important to understand that this was the low of the week, right? So the low of the week will occur typically on a Thursday or a Friday, depending on where you are looking for your TGIF. So now that we have the low of the week forming inside of a daily fair value gap, now from here, we're just using basic logic to get our overall analysis. So let's start here by looking at the 15-minute time frame, right? When I come to the charts, what do I look for? Well, it's really simple. When I come to the charts, this is what I look for. Yes, we're significantly below the weekly opening price. Now from here, we're going to switch to a daily PO3. So notice how we're synchronized with our time zones, right? Weekly power of three down to daily power of three. Now from here, we're going to be understanding things in terms of the ICT accumulation, manipulation, and distribution. So to kick things off, we have our accumulation over here, right? So this is ICT accumulation. This is just a liquidity building phase of the market. Now that we have this in place, it's important to understand what we're looking for. We want to see price give us an ICT Judah swing. So how do we determine an ICT Judah swing? An ICT Judah swing is very, very simply determined by a sweep of the Asian range low. So this is giving you your low of the day, right? This is the ICT Judah swing. So what will confirm a Judah swing, or what will make a high probability total sweep or a Judah swing or a manipulation, whatever you want to call it, is simply three things. And I want traders, if you have a notepad and pen, to write this down with you. You are looking for a sweep of the Asian range low, so sweep of the ARL, so the Asian range low, and you're also looking for a fair value gap to be respected, right? If you have these two things, your fair value gaps or your Judah swing is much likely to hold. So notice how we have a fair value gap over here that is currently held. So this Judah swing now becomes high probability. So you're anticipating this to be the low of the day. Notice how we have a fair value gap, a small fair value gap just over here. Prices, of course, filled this fair value gap, tapped into this area, and then rejected to the upside. So this shows us bullish intent, right? This shows us bullish intent. Now from here, what we're looking at is our daily opening price. So this is our daily opening price over here. If I just draw a line over here, this is our red line, right? This is important to understand. So once we have our daily power of 3, we're simply looking for a 15-minute fair value gap to trade from. Right, so just to make things clear, we have a 15-minute fair value gap. This is the key level I use, right? So notice how this is our 15-minute fair value gap over here. Now, this is a question I get a lot, and people don't understand how to use fair value gaps to increase their strike rate. And this is something I'm going to show you now. When you mark out a fair value gap, right, this is the fair value gap, absolutely correct, in blue. But when it comes to your point of interest or your order block or your POI, you're actually marking out the candle before the fair value gap, right? So this is an order block. This is an OB. This is a bullish OB, or you can call it a demand zone, or you can call it a point of interest. It's whatever you want to call it, but they all refer to the same things. So just by looking at this chart right now, we've identified a few things that I want all traders to take note of, right? So we have an ICT Judah swing. So we've seen the ICT Judah swing over here, right? This has given us our bullish manipulation, right? We've seen price kind of sweep the Asian low before heading higher. We see 15-minute bullish fair value gaps being respected. So we see a bullish fair value gap being respected over here. Now, the third thing we've seen is that we can see a POI just below the daily opening price. So this red line is the daily opening price. We're using the daily power of 3 to give us extra confirmation. So we are slightly below the daily opening price, or we are going to be below the daily opening price because this zone over here is just below the daily opening price. So once you have this in place, it's important to now use the lower time frames to confirm your overall entry. So let's head down now to the 1-minute time frame. So just to give you some context as to how we're looking at price, we have seen price respecting the 15-minute fair value gap over here. And we have a 1-minute fair value gap, a 15-minute fair value gap over here that's been highlighted. So now from here, what is the overall entry model, right? How do we look for trades on the lower time frames? So the way you look for trades on the lower time frames is by understanding the higher time frame. So we are below the weekly opening price, and now we're looking for a 15-minute entry below the daily opening price. So we're looking for a 15-minute fair value gap, then we're looking for a lower time frame entry. So lower time frame is either the 1-minute or anything up to the 5-minute, and then we're confirming everything with the order flow. Now, spoiler alert, if you're not using order flow, then you're doing it wrong. It's that simple, right? So these are the 3 steps I use. So step number 1 is we're waiting for price to come into this 15-minute fair value gap, and that's exactly what we see just over here, right? So price has come into this 15-minute fair value gap. Let's move things over here, right? So step number 1, we've come into a 15-minute fair value gap. We've tagged into this area, right? It's also worth noticing price is tagged in below the daily opening price. This gives us increased confirmation for taking the buy in the first place. Now from here, we're on the lower time frames and we're looking for that 1-minute entry. Now the third thing, and this is the most important thing that traders mess up on, right? It is the order flow. So let's take our knowledge and take it to the ATAS platform. The ATAS platform is essentially what we are using to trade, right? So notice how I just want to zoom out and show you we're looking at the same exact price action, but when we go to the 1-minute time frame, what I want traders to read is the candles upon the rejection, upon the entry into a 15-minute fair value gap. So if you're struggling with emotion, psychology, fear, hesitation, or you don't know how to keep your emotions in check, this is something you can use to really help you solidify your trades, reduce the subjectivity, and give you a much higher strike rate or a win rate. So we can see price reacting off this area. So what we're seeing as we come in, right, it's important to understand, even though we have price action moving to the downside, we see price melting as it comes into this zone. We actually see signs of aggressive buyers over here. So let's just break down this candle. We see 42 for 318. This means that there's significantly more buyers than sellers, right? We can see, despite the market moving down, we see a large number of aggressive buyers popping up here. We see 205 for 412. So that's roughly double the amount of aggressive buyers than sellers, right, coming into the zone. Now, when we come into the zone, what's important to understand, sorry for that, when price comes into the zone, what we're looking for is we're looking for sellers to fail. This is important to understand. We're looking for sellers to fail. So we come into this zone over here and we can see this as the most important thing, right? We can see this as the most important thing, right? 257 for 107. There's more than double the amount of aggressive sellers than buyers. Despite that, the market was able to find an area of support and move higher. Notice how we have a green candle over here, but price has given us aggressive sellers over here. So if you're looking for extra confirmation, what you want to look for is the fact that you see 4 zeros in a row, right? When you see 0, 0, 0, 0, this shows you significantly that there's more sellers than buyers at this area. So this is showing you the absorption of sellers. Very important to understand that. So when we go back to the regular candlestick chart, what we can see over here is we can see a significant number of sellers within this region, right? So price here, we see sellers. They are trying to drive price down, and they fail. So what this shows us, right? What does this show us from an order flow and price action perspective? It shows us that this zone is strong and the sellers in this region have failed. So if sellers have failed, your only option is to take buys, right? Your only option is to take buys because we're at a bullish fair value gap to begin with. So you can place your entry just below the rejection over here, and you are simply targeting the high of this candle over here, right? Minimum, that's a 2.2. I like to go for a 2.5. So just slightly over this particular target over here. So when we allow this to play out, what we saw is we saw a significant move to the upside in our overall direction. So what I want traders to understand and take away from this video is that you need to be using the order flow whenever you trade, right? So whenever you trade, you need to be understanding the order flow. So your fair value gaps, your breakers, your key levels, your breaks of structure are only going to be significant if you understand the order flow between buyers and sellers. This is important to understand, right? Notice how price comes back into this area, right? This was the news event, so we had a very, very large candle to the downside. Despite the candle being red, this is the most interesting thing, right? We see the candle as being red. It obviously moved to the downside. We see a very, very large seller propping up over here, very close to our key level. In fact, we see 584 for 2K. So there was roughly 4 times the number of aggressive buyers and sellers. So we see massive buyers despite having a red candle, and this shows us that the market is willing to reverse from this area. And of course, we had price tapping into this level again before heading higher. So if you are interested in trading properly and catching these high risk reward trades, it's important for you to understand and appreciate what moves the market. And it's really order flow that moves the market in the first place, right? So yes, we had a very, very large move to the downside, right? But when you're looking at the market, it's important to understand a few things, right? It's important to understand a few things. If you are looking to trade, so I exited here at a 2.5, that was simply because we had a very, very large news event over here. But for those traders who want to use a slightly wider stop, what you need to understand is despite having a bearish news event, there was a large buyer that stepped in this region, right? Large buyer that stepped in over here. And the only way you can see that is by using the order flow, because the order flow shows us that buyer over there in blue. So when we go back to the regular candlestick chart, again, to make things very, very clear, if you are interested in catching these high risk reward trades, the only way you can do that is via the order flow. So psychology only matters once you have a proper strategy. And the way you do that is by simply reading the aggressors and the passive participants at key levels. So let's break this down and make it very, very clear for people to understand, right? So step number 1 of the strategy is you're looking for a 15-minute fair value gap, right? Step number 2 is you're waiting for price to come into this fair value gap over here before giving you some kind of a break and retest. So this is easy to understand, but what traders miss is that you're looking for the buyers and sellers in this region, and you're looking for the buyers and sellers in this region. So the only way you can go long and have a safe stop loss is by understanding a few things, right? You need to understand as a trader, you're looking for aggressive sellers to fail. Now, this is very important to understand. You're looking for aggressive sellers to fail. So what's really happening is you're seeing a large amount of aggressive sellers over here. Let me label that in red, right? So you're looking for sellers over here. sorry, let me label that. You're looking for sellers over here to fail, and you're looking for sellers over here to fail. When you see sellers fail, you've seen them fail, you've seen them fail. That means the zone is strong, aggressive sellers are out of the way, and then you can look for longs, which is exactly what happened in today's session, right? So this is basically how you trade properly. So if you're interested in that, I am opening up spots for mentorship. We have a few spots left. If you are interested, comment below somewhere in this video and I'll be happy to help you out. Until then, take care and I'll see you all in the next one.